All right, now it lasted 2 years and cost about $700 billion. But was it a success? The man who was in charge of the Troubled Asset Relief Program, or TARP, Herb Allison, resigned last week, and he joins us now here in New York. Thanks so much for spending some time with us, Herb. And I don't mean to say that it costs $700 billion, because you're saying it costs maybe less than a tenth of that now.
That's right. In fact, we never invested $700 billion, only about $381 billion at the max. We've already been paid back more than half of that money. The banks have paid back 3/4 of the TARP money so far, and we're going to make a profit on the banks. And as you have read today with our 2-year retrospective report, we now expect that TARP will end up costing taxpayers no more than $50 billion and possibly quite a bit less. This is actually the cheapest of these types of programs anywhere in the world over the last 40 years. If you do look at a comparison to the S&L crisis, the cost of that bailout was 2.4% of GDP. This would be much less than 0.5% of GDP.
But one thing I wonder when I read about this, originally Hank Paulson was going to take this money and buy toxic assets and take them off banks' balance sheets. Right. Now we're hearing, Carol and I hear all the time, there are still a lot of toxic assets on banks' balance sheets, and that has to give you some concern about the health of the banks.
Well, looking back at the fall of 2008, when the crisis was at its height and TARP was passed by a bipartisan vote at Congress, it was shown that it just wasn't practical to buy in those assets for a number of reasons. First of all, you didn't have the administrative infrastructure to do that. Secondly, you didn't know what the price was, what these assets are worth, because the bid was sometimes 20 and the ask was 80. Also, it was understood by that point that we could have much more impact much quicker by putting capital into the banks.
And looking back now, 2020 is hindsight, of course, but I mean, looking back now, does that make the most sense that we did not buy up those toxic assets, especially when many people say they're still out there, nobody's really dealt, and we're just waiting for them to kind of play out here?
Well, actually, a lot of the toxic assets have been sold out of the banks over the last couple of years. They're still holding significant amounts. But what they've done in the meantime, thanks to TARP, thanks to the ARA program, the American Reinvestment and Recovery Act, as well as actions of the Fed and the Treasury to keep interest rates low, we now see that the banks are substantially recapitalized. They have much less leverage than we had before, and so I think the banking system is in a far stronger position to begin to promote greater recovery.
All right, and we do know we made money. We made 14% on money given to Goldman, 13% on money given to that went to Morgan Stanley. What about Citigroup, Herb? Still kind of the lone question mark. We poured, what, $45 billion so far, about $30.5 billion has come back. Are we going to get everything back on Citigroup in your view?
Well, actually, I think the chances of that are extremely good, because so far we've sold over half of our stake in Citigroup. We've earned a profit of over $3 billion on that stake. And we are quite confident now that as we continue to sell off, and we should be done with that within the next 6 months at the latest, taxpayers will see a profit on their investment in Citigroup.
We're looking good then. I mean, as far as profiting on all of these investments in the banks, why is it so unpopular?
I think that the reason is that nobody wanted to bail out banks in the first place. And I think people were angry about that, and they felt that there was moral hazard, as it's called, to bailing out the banks, that you'd put a lot of taxpayers' money in to benefit a few people within the banking system. Actually, there was no choice at that point. I think people ought to realize, and I'm sure many do, the real moral hazard was the reckless risk-taking within the financial system before the crash. And that's where a few people relatively in the industry were benefiting, and it was left to the American public to pay the cost.
Like AIG?
Well, actually, AIG was, I think, quite reckless in their derivatives trading, as we can all see today. AIG is a much different company today than it was a couple of years ago.
And we definitely want to talk a little bit more about AIG when we come back. So, Herb, we're talking about AIG. So they got $70 billion, and they're projecting that about $45 billion is going to be lost. I mean, does that sound about right?
Actually, the total commitment that was made at the beginning was about $180 billion.
Right, but out of TARP money specifically.
And TARP money was about 70, you're right. Okay. Based on the market price of AIG today, as the Treasury converts its holdings to common stock and begins to sell off, we believe at today's valuations that Treasury will make a profit on AIG. And if you look at
depending on market conditions.
Depending on market conditions, absolutely. But if we have to mark to market, in effect, the assets. And as we look at it today, the AIG investment would be profitable, which is a huge turnaround from 2 years ago, and I think defies almost everybody's expectations.
But will all 180 come back? 180 billion?
Well, 180 was never totally put out, but I think recently it was about 124 billion, counting the Fed as well as Treasury.
Okay.
And we anticipate that all that money will be paid back, and that Treasury, which is the ultimate recipient of all these funds, should turn a profit.
How quickly?
Well, again, this could take several years in terms of selling off such a huge block of stock. And we want to do this in a responsible way. One of our responsibilities in TARP has been to work for the best interest of taxpayers, as well as maintaining financial stability. So we're always mindful of taxpayers' interests, and we try to balance them both and try to get the best deal for the taxpayers over time.
The big number includes also government guarantees, right, on a lot of debt. You took over at Fannie Mae after the government had already taken into receivership.
Right.
How responsible do you think Fannie Mae's lending? You talk about AIG as far as being reckless in derivatives. How responsible were Fannie and Freddie as far as backing up reckless home mortgage loans?
Well, Fannie Mae was a company that was very highly leveraged. It had relatively little capital, about 40 billion when I showed up, and a total of 3.2 trillion in obligations.
It's not exactly Basel requirements, is it?
Exactly. And there was a balance sheet of about $800 billion.
Were you shocked when you saw these numbers and how leveraged it was?
Yes, I was. And but if you look at the years of the boom, Fannie invested in a lot of securities that, in retrospect, they probably shouldn't have owned. And it was that additional investing, which was more risky than their typical practice, and the high leverage that caused the illiquidity and the eventual need for the government to take them over.
But why did they do that, and who was responsible for that? I mean,
well, let's leave that to the Financial Crisis Inquiry Commission and many others who've been looking at the causes of all this. What I can tell you, though, is that the people who were responsible for whatever problems happened were no longer with the company when I showed up. I found they were extremely dedicated people working really hard. Our mission became helping homeowners stay in their homes, help to maintain a very liquid mortgage-backed securities market. And I think these are great. These people are real professionals, and they've done a tremendous job.
But I think what Matt's going at, and we've talked about this a lot here in the newsroom, about public policy, whether it's Republicans, Democrats alike, we're saying everybody should essentially have the right to own a home, and now we're kind of finding out that that maybe isn't true. And I hate to sound unpopular here.
Is it a human right to own your own home? I mean,
you know, my dad saved money until he could afford it. You know, and I'm saying that maybe public policy has to be re-examined in terms of home ownership.
Well, I think as part of the administration's preparation of proposals to Congress and the public on what ought to be done, they're certainly looking at those types of questions. There's a very thorough review going on within the government now, and I'm sure there'll be a big debate once the government's recommendations are made public early next year.
What's the future of a Fannie and Freddie, in your view?
Well, again, that has to be decided. And I think,
what do you think, having seen the books and seen how it's played out here?
A lot of it has to do with what the U.S. policy on home ownership ought to be, what the policy on financing of home ownership. We've had in this country a really unique system where money's been readily available for mortgage lending since Fannie Mae was invented in 1938, and then Freddie Mac later. This has worked very well in terms of enabling people to afford to own a home, and we've managed to keep rates relatively low. In fact, they're at nearly all-time lows today, which is helping the housing market. So, there will be, I'm sure, a debate about what the public policy ought to be. But we do have a lot of assets in this country around capabilities in mortgage markets, the understanding of how these markets work. So I think questions will be, what should be the nature of the policy toward home ownership, and how do you underpin that with effective markets that are available in good times and bad?
Clearly right now, I mean, TARP put in $30 billion for homeowner assistance. The government is trying to engineer a soft landing here. How long do you think that's going to take before we really get to the bottom in homes?
Well, I think what we're seeing now is greater stability in these markets. Home prices were plummeting at the time that the Obama administration took office. You've seen these various homeownership and other housing programs introduced pretty early in the administration. I think these have been more successful than they're often given credit for.
Right.
And they've helped millions of people arrange more affordable mortgages.
So, Herb, we've talked about AIG. We've talked about homeowners, or at least Fannie Mae and Freddie, the auto industry. How do you think that's going to play out ultimately?
Well, we're seeing that the auto industry, and specifically the two companies that received assistance from TARP, GM and Chrysler, are doing much better. And I think what's important to remember is that the Obama administration put conditions on providing additional funds to those two entities. They had to fundamentally transform their business model. They had to change over the board and the management. And what you see now is a newly energized company in General Motors and Chrysler as well, and GM moving toward the IPO, which is expected to take place in November. And so the company has resumed momentum. It's rolling out new products. We think it's being well managed. And so the Treasury Department decided at this point that they would approve selling some of their shares into this IPO.
Tell me about the numbers, though, because I think, and you correct me because you were on top of all of them, I think $82 billion was committed to GM and Chrysler, roughly?
Total, that's about right.
And what I'm hearing is that Treasury expects to lose about $27 billion on its aid to GM. Is that right?
Well, again, this is going to depend on the market prices of those entities. What we have seen is that the valuations in our modeling have improved. And you know, we're hopeful that as the economy more fully recovers, and of course these two companies reflect the overall economy in terms of auto sales, right, that we should see their valuations improving over time. But again, we'll see it as it comes. We mark to market those investments based on various methods that we have in the absence of the stock being freely traded. And you know, we are much more optimistic than we might have been a year and a half ago about the outlook for taxpayers getting most, if not all, their money back.
But you're not saying whether or not you'll get all your money back.
Well, again, I don't want to
me, and everybody else.
This is the company whose stock is in registration right now, so I don't want to make any predictions. But we are encouraged by the progress that they've made, and we're encouraged on behalf of taxpayers.
It's interesting because you estimate losses of about $50 billion, and that's basically what you're going to get if you add up losses from the auto industry and the homeowners assistance program. So really, the investment in Wall Street, which everybody hates so much, has paid off, and we've lost money on the others.
Well, actually, what you have to look at, though, I think, is not just the profit and loss on TARP, but what's been the impact of TARP on the general economy. You know, if TARP had not been used to rescue GM and Chrysler, and those two companies had gone down, Ford would have been in trouble because they all share the same suppliers. The suppliers might have gone down as well. You could have lost 1.5 million jobs on top of the jobs already being lost in the economy if those two companies had been allowed to fail. What's happened is you have now restructured a central industry to the United States, and its prospects are better than they've been in years. And the auto industry has actually added 70,000 jobs, over 70,000 in the last year.
We got to run. Herb Allison, thank you so much.
Thank you.